Hey everyone, and welcome to another episode of the Awkward Watersport Guys podcast. Today we are joined by Chris Murray of Granite Insurance. He's the senior business risk consultant, and he heads up the Arrival Pro Shield program. Chris, welcome to the show.
Thanks for having me. Glad to be on with you guys.
And as always, we have Kevin. Did I say it? The co-host with the most? You like that?
Co-host with the most stupid jokes.
Yeah, I know.
Still kind of rhymes.
Yeah. And today we're going to talk about something that everyone just absolutely loves to talk about, especially in our Facebook group, insurance.
Yeah. So I would like to preface this as, well, when the show comes out, it'll be a week ago, but I made a post about hard selling. And if you're not in our group, Greg and I really don't hard sell our business products to the group. I have hard sold ideals for a very long time. If you listen to this show, if you're new to this show, I've hard sold the idea of safety and best practices, and maybe I didn't articulate that in that post, but that is what I'm hard selling. And in full transparency, I didn't realize that Chris was coming on the show today until yesterday. So it's just been the world I've been existing in. Sort of, I've been very busy with new ventures and all this stuff, and I've had my head down and in startup mode. And I go, oh, it's Chris, and this very subject I have been thinking about very near and dear, as I've historically been pretty hard on the insurance industry and sort of like, waving they're getting in there and lobbying and trying to ruin our industry, and there's all a big cash grab. But I've been educated, not personally by Chris. Chris and I have spoke, but I've done a lot of information digging on my own, spoken to a lot of independent sources. So I'm not here to shill you guys on Granite Insurance or wave res or take my boat test. We're just here to have an organic conversation like we always do with an insider in the insurance industry. So Chris, we appreciate you coming on and having your time. Why don't you tell us a little bit about yourself?
Yeah, sure. So I have been with Granite Insurance and on our adventure and entertainment team since 2017. We launched the Arrival Pro Shield program, which we found, as you're finding even more and more, you sort of alluded to there, very underserved group and community, with water sports obviously being part of that. And, our approach, you mentioned education, Kevin. I know that your sort of attitude about insurance in general has changed a little bit with education. And as I mentioned before the show, a lot of times I can't change the facts. I can't control pricing to a certain degree. That there's only some things that I can do, but we find that one of the biggest values we're able to bring is education, helping people understand why things are the way that they are and what they can do to address and put themselves in a better position.
All right, awesome. So I want to get started with you on let's talk about a little bit about the differences in baseline operation. This has become. In fact, I just posted something this morning in the group. How old do you have to be to operate a jet ski? And I got 5 different answers. And to be fair, that has changed on the insurance side. Can you sort of speak to maybe a little bit of the struggles or the disambiguity between the insurance state? I mean, so every state and insurance company seems to have, and manufacturers' recommendations, their idea about best practices. Where does that come from, and how do you guys come up with those baselines?
Yeah, that's a great question, Kevin. And the short answer is it depends. It depends on some of the things you mentioned. It depends on the state. It depends on the insurance carrier. It depends on what the operation is, whether it's jet ski rentals versus bareboat rentals versus, captain charters and that type thing. Different carriers, specifically to your question about age of jet ski rentals, that's also going to depend on the carrier. Some of them will be neutral on it, but will take into account, your answers on an application. I rent to 12-year-olds. They may not ban that or disallow that, but they may take that into their underwriting when they do it. And I'm being a little bit facetious there. Um, there's not a hard and fast answer to that particular question about age.
Okay. Has there been any comprehensive studies or data that suggest a certain age or age of an operator is inherently, like, 16 to 17-year-olds are a representative of 10%? Like, what are the others? Why isn't there a better baseline? Why isn't there, like, we know in the United States, you're 16 years old to drive a car and 15 with a learner's permit, and there's a baseline and a reason for that. Why isn't there, or has there been a study to come up with more of a standardized approach to boat rentals, jet skis, operators of these activities?
Yeah, that I don't know. I would be lying if I were to cite a specific study or to tell you, yeah, you can go here to see the data on that. However, underwriters are using actuarial data all the time, right, to come up with their rates and to come up with what they charge and just their underwriting process. One of the things that is our intent to do, and it's going to take some time, we've done this with other industries, and that is to, as you guys may know, we're fairly new to the water sport world in general. That book of business is rapidly growing for us because I mentioned as how underserved it is. But one of the things that we do with some of the communities that we serve, like the water sports community, is take the data that we get and start to compile that stuff ourselves. We're far too new into this particular niche to have that data right now to be able to report on that. We hope that that's something we can do in the future and to share with you guys and with other operators with the intent of, again, educating and helping understand how to take control of the cost of your insurance, and then weigh that against business and operating strategies as well, right? Like if we said, okay, no one over 28 has jet ski accidents, well, you're not going to not rent to anybody that's under 28. But if you have the data, you have some information to make an educated business decision on.
Is the
Chris,
industry missing? Is there a gap of data for water sports? Is there not like any kind of real accrual of data on this industry across? I have no idea like where you guys get all of this data. So let me rephrase that question and into that. Like, where do you guys get, and how much data you compile to come up with a risk assessment?
Sure. So, and when you say you guys, I realize you're talking about insurance in general,
Sorry, yeah,
which is
yeah.
fine. And just as a point of education or clarification, we're not a carrier. Um, Carriers have access and get their own data. What is a challenge for this niche as opposed to, a flower shop? There's however many, hundreds of thousands of family-owned businesses, and so carriers have data after data after data, and they can statistically predict with in a certain amount of time or a certain amount of revenue what they can expect their losses to be, and they can do that relatively accurately because there's a massive number of cars on the road, of retail shops, of your more basic stuff. Water sports being not so basic and a small niche of the overall exposures that carriers have, there's not as much data there to predict that and to make those statistical calculations.
yeah.
Just by nature of there's not that many.
So
Relatively
Chris,
speaking.
you work with a large swath of different verticals, not just tourist activities and water sports and boat tours, but I've noticed that post-COVID, that there's been a lot of compliance changes, a lot of regulations, insurance prices have skyrocketed. We know that the outdoor experience industry has really grown. We've seen huge investments into different platforms. What do you think that like the insurance industry is just reacting to this massive growth? Like, what do you hear from like your trade groups regarding outdoor experiences and insuring? Like, what is there some event happening or some information that's that's changing our landscape?
And Greg, when you ask that question, you're talking about increased prices and increased limits, and is
Increased
you asking?
limits, yeah. Like, we go back to that question on Facebook. We had the, operators saying that marinas are requiring really high limits just to operate there. I'm sure it's not the marinas saying this, it's their insurance company saying, hey, if you want to have that tenant, you need to make sure they have this much. Those limits are really high from what I've seen.
Yeah. Um, there's no one thing in particular drive. Well, if I had to say one thing in particular that's driving it, would be the increased cost of claims, and we can talk about lots of different things that are driving that up. One of the things you mentioned that I suppose is quite relevant is these activities are picking up, right? There's a lot more participants doing these type things these days than there were just a few years ago. Therefore, there's going to be more claims. Add to that the fact that these claims are going for astronomical dollar amounts. And again, we can talk several reasons of why that is. But that's what's driving up the limits. And then, your bigger players, your bigger marinas or hotels and that type thing, these guys are carrying 10, 15, 20, 25 million, maybe even more dollar limits. And if something bad happens, the attorneys are going to go to the deepest pockets, right? And so their carriers, to protect themselves and to hedge themselves, are requiring the operators to have higher limits because that's their first line of defense in that scenario. If you're a jet ski rental operator out of a marina and something happens on your jet ski and it's bad, attorneys are going to sue you as the operator. They're also going to sue the marina just by their vicarious liability and because they've got deep pockets. So their carrier is going to require the operators to up their limits so that they can respond to these larger claim settlements and jury verdicts to protect themselves as well.
And tell us more about the claims. You said the claims process is getting more expensive. What are the factors driving that?
Yeah. So one, cost of medical bills, number one. I mean, that's going up. Inflation, we'll go ahead and throw that out there because everybody's worried about inflation. But more importantly, we call it social inflation, and you'll hear that as a buzzword in the insurance industry. Social inflation is increased cost of litigation with attorneys. Jury verdicts are going higher and higher, and part of that is due to, if you read about it, part of that's still tied to sort of anti-corporate sentiment back in the financial crisis. And a lot of people think, they throw insurance carriers in there and it's just these big evil companies that are making all this money. So anytime a jury gets an opportunity to punish, that villain, they're rewarding astronomical amounts. And then, so that starts to happen in the media. You hear about these large verdicts in the media. So we get desensitized to the numbers. The numbers don't mean what they used to be. Used to $1 million sounded like a ton of money. And now it just doesn't go that far when you're seeing, these verdicts. Furthermore, the erosion of tort reform in different states, eliminating the monetary cap on certain settlements, lengthening statute of limitations, and then attorneys' tactics, man. The money they spend on advertising, they venue shop, so they'll try to take it to a court where, historically speaking, they're more likely to get a higher verdict. And I don't want to throw them all into a group, just like I don't want you guys to throw all insurance people into a group. But that attorney business is there's a lot of money revolving around that. In fact, I read an article today.
When you go to Vegas.
Yeah, go ahead.
I'm sorry, I didn't mean to cut you off. There might be a small lag between us, but when you go to Vegas, it's like it's so dialed in, like niche. It's like, did you choke on a chicken bone in room service? We are the chicken bone choking experts. And and it was ludicrous. Like, they was so niche down. And so when you say that social inflation, It's like I've heard operators just talk about certain attorneys, like they have the billboards up in their neighborhood, and it's like,
Yep.
hey, did you get hurt? Like literally, I mean, right now, probably Morris Bart is like rubbing his hands together to spin up a "Did you get hurt at Crab Island?"
Wait,
billboard.
so when you're leaving Destin, there are billboards on your way out that just say, "Did you get hurt on vacation?"
Yep.
Like, it's the solicitation, and I've never seen it this bad in all of my time of being in business. It's just the attorneys are advertising. And the most expensive click on Google is attorney, like
Wow.
attorney businesses. It's crazy. They're paying like $100 to $150 a click on Google, for leads. It's insane.
Yeah. So, like, yeah, we know, like, what do you call 1,000 attorneys at the bottom of the ocean? Like a good start. We know who's the real true villains are in all this, and you mentioned tort reform, but I wanted to. So have you done anything with like, let's say for example, like roller coasters, right? They have these size limits, right? And these like sort of like weight limits. And can you speak to, and I know this seems out of left field, but I do have like a point to all of this that I'm
Right.
sort of asking for baseline. Well, I'll just make it a statement, all right? So it's like, I'm assuming at some point, some kid got thrown out of something, somebody sued Disney or whoever for $10 million, and then they had to do a study, and they had to come up with a size that the person could be to ride the ride, right? I'm probably not too far off base there. The reason I bring this up, and the soapbox that I'm kind of standing on is, and I'm going to form this now into a question for you, is what can operators do in a void of universal standards and practices, whether it be A, personally, or B, as an industry?
Yep. No, I think you're exactly right about that, kind of the scenario that you threw out there. I don't think that's too far off. The difference is there are enough players and enough big money Disney, Busch Gardens, these guys, where there are associations, safety groups, engineers, they've got a ton of resources as compared to, and again, I don't want to generalize you guys either, but, as you know, a lot of water sport operators may have started with, hey, I had a jet ski and, want to start a business. You certainly don't have hundreds of millions of dollars like Disney and
Mm-hmm.
the resources. Now, I don't know, but if you went back, 30, 40, 50 years ago and you started to look at the evolution of that, it probably started with conversations very similar to this and with people very similar to you, Kevin, who want to better the industry and are trying to do so. And then I would imagine it evolved to what it is today. So you may be on the cusp as a pioneer of doing that for the water sport industry, but it's certainly not there at the moment.
Of all the industries, Chris, that you work with, do you find that water sports probably have the most complex and comprehensive, approach, to insurance?
It's been quite an eye opener to me. The way that we've sort of made our way in this business is identifying underserved areas, and that's kind of what led us to our relationship with Bruce and Arrival. And as we've gotten into it, we've realized that it is much more underserved even than we imagined. But it is very complex because you've got different carrier appetites, and I have this conversation a lot. You may have one operator who does bareboats and chartered rentals and jet ski rentals and kayaking tours or guided tours. But there may be carriers who are okay with kayaks and jet skis, but they're not okay with bareboats and charters, or so on. You could
Mm-hmm.
mix and match that all together. So putting all of this together, understanding the operator's exposures and knowing what carriers and their appetites has certainly been a major learning experience for us. Don't even begin to talk about SB 606 and all the misinformation and lack of education and all the stuff out there. It's a wild place to be, but we're really enjoying it, and we are finding opportunities to bring value again through education and doing these things for folks.
That's the biggest problem I see in our industry is that most water sport companies offer multiple different activities, and it's always like we got Kevin and I have one friend that he offers parasailing, jet skis, boats, and because of the jet skis, he has trouble getting the rates down. Like boat rentals itself, you can get a policy on just boat rentals for less than $2,000 a year per boat. It's
Yep.
the skis, it's the parasailing, it's the Wave Runner Dolphin tours, it's the stuff that is higher risk that increases the premiums for everything. And finding a carrier that will do a blanket policy like that is very hard. And I don't know, is it ideal to have like insurance for just your boats and then insurance for your skis? Is that typical?
It is typical. I would not say that it's ideal. In a perfect world, you would have the same carrier on all of the exposures. That way, no
Yeah.
matter what happens, and I could paint. You may have to use your imagination or bear with me for a bit of a stretch here. But um, if there's a claim, let's say it's a claim on a dock, right? Is that the boat carrier? Is that the jet
Got
ski
it.
carrier? Really, it's neither or it could be neither, depending on how the policy is drawn up. Um, so that's why we would always rather have one carrier. That way, they're not pointing fingers at the other, trying to get out of a claim, which
Mhm.
is another part of, by the way, we talking about increased limits and why these marinas and their carriers is they've been burned by so many bad policies. There's several carriers out there that are notorious for putting verbiage in the policies to get out of paying claims, to putting in sublimits, and a lot of times they're the last resort, and it's all you've got.
Mhm.
But that's also a big contribution to the problem.
Yep.
Yeah. So that the method of insuring separate entities, they call that insurance stacking, right? And it's like pretty frowned upon in the insurance industry because of the cross contamination, so to speak. But um, I had another follow up. So can you speak to risk retention groups, right? So if you have a pool of operators and I know it's almost antithesis to maybe what you do, but risk retention groups and reinsurance. Can you kind of explain how that works? Because I know this does happen. It's happened in parasail, and yeah, let me get your thoughts on
That's a
that.
good question. I'm glad you brought that up, Kevin. I hear a
That
lot
that
about
is a
this.
great
Yeah.
question, and we would love to help set up a risk retention group, a risk purchasing group. It takes some big backers, money wise, and obviously a lot of work and effort. And don't let me just point of clarification on some semantics here, some terms. Um, don't confuse what we're talking when we're talking risk retention group. Let's don't confuse that with a captive. So in reinsurance, a captive is where in a single cell captive, somebody has enough insurance spend. Typically, they're spending more than their annual exposure, right? And let's say it's $1 million. It makes sense to set up their own insurance company, which is called a captive. They pay premiums into it just like they pay into, Travelers or Hartford or whoever their carrier is, but they get to, they keep that money via that company. And then there's reinsurance purchased on top of that. A multi-cell or homogeneous, you could do a mixed captive again, where somebody or a group of people have to front money to pay potential claims, and then the group pays premium into that captive or that insurance company. Obviously, claims get paid out of it. Um, so when you start to mix the risk like that, now one operator may say, okay, well, we know that we're best in class. I don't want to be lumped in there, and I don't want to be paying claims for some random guy that's not best in class. And then risk retention groups is very similar to the second illustration of the captive there that I've made. But it can be done. It just takes a lot of work and a lot of money up front. There's a lot of money to be made doing it, and it can help the industry and provide a solution that you guys don't have now. We've had some very high level conversations with a big player in the industry who, sort of expressed interest in that. We haven't gotten far enough down the road to make anything happen just yet.
Okay, here's a question. So what if we got 100 water sport operators, the good operators, to participate in something like this, but part of the covenants would be that if you had a claim of this degree, it could be a death, that you would be non-renewed for that. Is that something that could be, so if they would have to apply, they would have to have a fairly clean, or there'd have to be some standards to what the application process is, and if you have an incident, you immediately lose your ability to be in this collective. Is that too much to ask, or is that a scenario that could work?
No, that's not too much to ask, and it's not unlike regular insurance carriers
Yeah.
now, right? I'm sure you guys have heard horror story. Hey, we had a claim and we got non-renewed. Now we can't find insurance, or now our
Yeah.
insurance went through the roof. That's the way it works.
I mean, because there is probably a good pool of operators that have gone, 5, 10 plus years, had not had one claim, and would be great, to take advantage of something like this. And then, the threat of losing, the opportunity to be in this collective by being careless. I think it holds everyone to a little higher standard, even more than previously. I don't, Kevin, what are your thoughts on something like that?
My thoughts are, so let me just make sure I get this straight. So let's just call it a million per occurrence, 2 million aggregate industry standard. You're going to have to assumably have at least $1 million in liquidity to fire that up, and then you're going to still pay your premiums. But let's just say you have, let's call it 10 operators, because I have a fucking 100 operators, I'm all set.
Yeah.
But 10 operators of obviously certain criteria, put that $1 million in an account. Assumably that $1 million, if it were not spent, would be earning interest somewhere.
Yeah.
Right. Earning interest. It's also there, and there's a ton of financial strategies to doing a captive, and there's a bunch of different ways of setting that up. But you're right in general, Kevin. Now you pay your insurance premium, carrier gets it whether they pay a claim or not. Well, in that scenario, you pay your insurance premium to the captive, or to that group, that fund, and it stays there. You don't lose it. It's earning interest. And if it's a group captive, the whole group can either, depending on how it's set up, can either take dividends or reduce their insurance costs, or what have you. But you're not just automatically giving up that money. Yeah, you could have bad claims and you could blow it up, but usually if it's successful for 3 to 4 years, then it's set, and then it's going to start making money. And you can always start with a lower exposure for the captive itself, and then as it grows and as it builds that loss fund, you could take on more of the exposure, or raise the attachment point that your reinsurance kicks in.
Chris, are carriers profitable in our space? Are they making a lot of money? Offhand, do you know?
I don't know what the loss ratio is. So I'll give you a little bit of statistics.
Mm-hmm.
A carrier is ideally, they're going to be at a 35% loss ratio, meaning for every dollar they bring in premium, they're paying out $35 in claims. That's where they would like to be. They don't always operate that. Sometimes they're operating closer to a 90% loss ratio. They're also making money on their investments, which is not insignificant, right? They're using your money or using that money to make money.
Oh yeah.
As a whole, insurance companies, contrary to popular belief, have taken a beating over the last several years because of the things we've talked about, the social inflation, increased cost of claims and claim settlements. So they have been much less profitable for the last few years. which is what is driving this hard market. You'll hear that term thrown around a lot, and this is the hardest market we've seen. I wasn't around, or at least not in the insurance world then, but this is the hardest market we've seen since the 80s. And hard market is essentially, if you think about like a real estate market, it's a seller's market. If a carrier doesn't want to do something, they won't do it, or it's expensive relative to what you would expect, or what you were hoping, or maybe what you experienced in the past. But they're still catching up for some really tough years of not being so profitable.
Is $100 million considered a lot or a little for their escrow, or what do you call the funds? Is that a small amount or a large?
The loss fund? No, that would be
fund.
Quite significant.
Quite significant. And the reason why I threw that number out there, because at 5% APY, they're making $5 million a year. If there's a $1 million limit, I mean, I don't know what the percentage of losses that a carrier would have of that size, but I mean, 5 losses in 1 year seems to me like quite a bit. I mean,
so basically what it sounds like is it's just like, so this is for most carriers, like this is just an investment, and there's places that they can put their money elsewhere that are going to get a better return because of the amount of claims, right?
Yeah.
So please let me fucking raise my desk so I can get on my soapbox.
Here we go. This is what I've been looking forward to.
Well, no, this is the most frustrating portion of it to me, right?
Sure.
Because it's like, well, I'm paying so much in insurance, and fucking I can't get a carrier, and da 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 da. And then I'm like, well, do you do A, B, C, or D? Well, no, it's so expensive. It's like, listen, man, like, yeah, I get it. You know what I mean? Like, you own a boat, right? Break out another $1,000.
Right.
Like, if you want to get into something that's got better margins or better whatever, like, this is either it's like all or nothing, man. You're either in this life, you're either operating because you love the industry, or you want to make money. If you want to make a shitload of money, louder for the people in the back, don't rent fucking jet skis. I'm sorry, but that is the reality of it. Like, you don't own the property, you're operating on the water, in salt water most of the time. You have high insurance costs, you have high labor costs, you have high marketing costs, you have restrictive, like all of these things like equate to not the most profitable endeavor. So if you're going to lose a couple points, or you're going to use a couple if you're going to lose a couple points on your profit because you're going to operate as safely as possible, you're going to spend extra money on it. That might be extra money on employees. That might be extra money on equipment. That might be extra money on safety measures. You got to spend the money. And the thing that I keep on hearing over and over and over again, if it ain't broke, don't fix it. And it is so fucking fundamentally broken. And it's not because of insurance, and it's not because of lawyers. It's because of bad operating practices. Now, most of the guys that listen to this podcast and most of the guys in our group are doing everything they can. I'm not speaking to you guys. Who I am speaking to are to the people who have operated without impunity, whether it be for 6 months or 6 years or 25 years. But the point is, if we don't do something as an industry to reduce accidents, we are not going to have an industry. Yeah. And the thing that some of us love and are in it for because we do love the industry and love the people and are passionate about it, we're the ones who get fucked. You want to go open up a hot dog stand because you're a serial entrepreneur? Awesome. But the people that have bled for it are the ones that truly lose.
Yeah,
I stepped down off my soapbox.
And Kevin, here's something to kind of add to this. So let's say that you own a flower shop. I'm sure insurance is practically nothing to run a flower shop, right? Now, if a guy goes into the flower shop, buys a dozen roses, goes to the harbor and starts selling the roses for $5 a piece, they're unlicensed, they're just, trying to make a buck, there's no risk to selling roses, right? Now, you take a legitimate jet ski operator who's doing all the right things, he's paying insurance, but then you get someone who buys a ski off Craigslist and starts going to bow ramps and renting that out. He puts everybody at risk. So the rogue operator that's unlicensed, he is the one driving up all the costs. And it's so easy to do that nowadays with all these different platforms and ability to rent. You can literally buy the ski and immediately put it on some of these peer-to-peer sites. Immediately, you have this operation without any licenses really required. Now, I take that back. I mean, I'm sure these platforms do have, some, application process, but at the same time, I'm sure it's pretty easy to subvert all that. You can go to Marketplace and still rent. But again,
wait. I got to interrupt you guys.
Go ahead.
Again, it's not just them. There's some legacy operators here that are still and Chris and I
you're right. And there's some pretty bad
on.
people who run flower shops too. I mean,
100%. But we spoke to it because of the and what I call it was an incentivization to not report. And so here's another problem, right? Because you have somebody like me who's like wheels grinding nonstop, and I'm like, man, can we get and I'm asking Chris these questions about age, about weight, about maybe it's geo-tracking, maybe it's a helmet, maybe it's collision avoidance tools. Like, I'm asking my agent about all of these tools because I'm like, what can we do as an industry to try and reduce accidents? And look, at the end of the day, I do everything I feel like under the sun, and accidents are going to happen, right? That is why you have insurance. Like, nobody is completely immune from having a tragedy happen that was just 100% out of their control, right? I'm not saying that all operators are responsible for all accidents. However, when you're trying to commit to best practices, and as I said, like stubbing your toe on the dock, right? It's like, Chris, I mean, you guys want to know about every incident, right? And why is that?
Yeah, in a perfect world. So several reasons, Kevin. One is in that incident, if something were to, and again, you had to bear with me for a bit of a stretch here, but in our industry, we see everything. But take the stub toe on the dock. Let's say it's a cut, and we don't report it, and it turns out, there's an infection, and later down the road, the toe gets amputated. Again, bear with me for a bit of a stretch here, but if we didn't report that, there potentially could be no coverage for it. And speaking of no coverage and reporting, some of those sort of bad policies that I was talking to, one of the most restrictive ones we see, and we see it a lot because, especially in the jet ski rental industry, that it's on what's called a claims made form, which means that the claim has to be made during the policy period. So if something were to happen on Friday and your policy expired on Saturday, and the claim doesn't get reported until Sunday, there's no coverage there. And then this particular form, and claims made forms by themselves aren't terrible. You can purchase extended reporting periods and that kind of thing, as long as you keep it in place. But this particular form that I'm referring to says you have to report it within 72 hours. And if you don't report it within 72 hours, there's no coverage. But a lot of times you don't know something happened until 72 hours later. And by the way, we mentioned tort reform and statute of limitations. It's a strategy of a very well-known strategy and very well-used strategy by attorneys that they won't file until just before the statute of limitations ends. You probably don't have the documentation you didn't report. Another reason why you want to report when something happens, you want everything to be documented in as close to real time as possible, because when the suit happens, 2 years and 9 months later, we need to have everything documented and ready for that defense.
That's a good point.
Yeah, and so, this is where the frustration comes in, right? Because, and look, I mean, it's a struggle. When someone's doesn't need medical attention, they skin their knee and they're like, I hurt my knee, and they say something, and you're like, oh, you don't need require medical attention, so I'm not going to report it. It's because if you do, your claims are going up, or you might be. That might be the straw that broke the camel's back. With how volatile the environment is, I don't even necessarily think it's the claims. It's like, man, can I even get coverage? You get someone to write you, and you're like, oh wow, thank you so much for giving me jet ski coverage so I can actually operate. So
right.
as I said earlier off tape, that it's almost like you feel like you're being incentivized to not report. So this causes a twofold problem, not just in the litigation, but in the analysis of what happened. So how can we as an industry find what best practices are if there's such a massive, rampant amount of underreporting going on?
Yeah.
I can't, like, if jet skis are colliding head on, right? So for example, I ran tours when I first started because I thought that was best practice. And then my agent was like, well, we don't really like tours because it puts liability on you. And then I was like, oh man, well, I don't want to just free ride, like give them willy nilly, because I just don't want the accident to happen. But here, lo and behold, it goes, they don't like tours because ding, 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 accidents are happening on the tours. They're colliding with other skis. They're hitting bridges. They're getting close to things. So it's like in this pursuit of understanding what safe practices are, we kind of have to tell on ourselves because I don't know that I'm interested in forming up a risk retention. I don't even know that I'm interested in jet skis anymore, to be honest with you. And I think that's a general sentiment of operators who have multi-offerings and tours and things like that, because it is so unbelievably frustrating. It cuts into your bottom line. But at the end of the day, because I do love the industry, that's a part of my payroll, man. Like those jet skis pay for my employees. They pay for the off-season salaries that I pay to keep people working. They put our employees in houses and pay their rent and stuff like that. So it's like, at the end of the day, I'm not seeing a lot, but it does pay for the staff and the people that we give jobs to. And so it's like, I don't want to see them get burnt to the ground. But at the same point in time, if we don't know what's happening, how it's happening, why it's happening, then we can't as an industry say, this is the safest practice. This is the best way to do it. And maybe that market will soften a little bit if we can manage to reduce claims.
Yeah, those are all good points.
Because I definitely
Kevin.
wouldn't spin up a risk retention group. I wouldn't spin up a risk retention group with a bunch of guys that had, you know what I mean, X amount of lost runs and weren't like, I wouldn't, you know what I mean? Like I would be like I wouldn't do none of that with you. And insurance companies are no different, man. So.
Well, that's right. And so that now that you're looking at it from that perspective, you can maybe understand a little better why the insurance carriers are so hesitant to take on that risk too. Because that's what you're doing is you're saying for this amount of dollars, I'm asking you to put your neck on the line for $1 million. And if you're not willing to do it, insurance carriers who have all this, and they've got better places to put their risk, right? You can understand why it's such a difficult market. For the reporting, you shouldn't be punished for, we file claims as for reporting purposes only. We do that all the time, and you shouldn't be punished for that on your loss runs or in any way. And back up prior to that, we do have, and we do trainings all the time on best practices on incident reporting internally. What happens when something happens? How do we handle it? Who does what? What do we say? What do we not say? How do we handle the media? What do we document? What do we put in our incident reports? Who do we ask to do that? All this type stuff is best practices across all industries. And we've got some resources that I can share, and I think we've got some on our website and even Arrival's website for specifically that, webinars and things that we posted. But I think Kevin and Greg, to your point earlier, we were talking, one of the things that I'm an eternal capitalist, right? I believe in the free market, and I think that this is the best country to build a business in, and I don't blame someone for seeing the opportunity. Hey, I've got a $10,000 jet ski, but I can go generate some money with, like, okay, I like where you're thinking. And then, and quite frankly, in your industry, there's a lot of people who started that way. And then it grew into a business, and they, maybe at first they were doing it on a 90% profit margin, but now they've got these expenses with insurance being a big one. And then it's hard to evolve from where you started and came from to, I want to be a legit business owner that's going to cut those margins way down, but I'm going to have to do it if I'm going to do it right. And I'm going to have insurance. The other thing too is, a lot of operators look at insurance as an expense that they're required to have, and they want to keep their limits as low as they can, and therefore keep their costs as low as they can. I realize nobody wants to spend any more money than they have to on anything, especially insurance, but they've also got to realize that that is a mechanism to protect their assets and their balance sheet and all that they've spent their life building. And without it, you could self-insure. I mean, you couldn't get certain contracts with marinas and that type of stuff, but there's a reason you don't self-insure, right? You're sharing that risk with other people, and you're paying a premium dollar, to protect your business and everything that you've built. It's not just an expense that has no value, or it shouldn't be.
Mm-hmm. Well, we're getting kind of to the end here, Chris, and I just want to thank you for taking the time to have this conversation with us. I think everyone's going to find it very helpful, explaining a little the inner workings of the insurance markets. Tell us a little bit about Granite. Take a moment to kind of pitch. Why Granite? What do you guys do differently?
Yeah, I appreciate that, and thanks for having me on. I've really enjoyed it. I always enjoy my interaction with you guys and the community. I think that anytime somebody asks me that, what makes Granite different or why Granite, everything we do starts with the plumb. We exist to empower other people for success, and that looks differently for different folks. Part of that is educating people in the water sports world on why their premiums are so high. But that's the ultimate thing is we exist to help others, and so our approach is not let us save you 10% on your insurance. Let's have a relationship, become your advisor, just like your CPA and your attorney, and work as a team to find a better solution for you and help you be more successful.
And how can they get in touch with you? If they have any questions?
Sure. Check us out at graniteinsurance.com. My email address is cmurray@graniteinsurance.com.
And you're in the Facebook group too. So
in the Facebook group,
just tag Chris if you have, or DM him.
Absolutely. Happy to answer any questions and provide, help in any way that we can.
Yeah. All right.
Great.
Well,
now I'm all fired up, Greg.
Yeah,
I know. Go and yell at my crew.
I can tell you guys started getting a little red there talking about it. I know insurance is always your favorite topic.
Laws and governmental laws.
So I know we're going to have a lot of listens to the show. If you made it to the end here, please go on to our Facebook group and post your questions, your thoughts, anything about it. Like, honestly, when we hear what you're thinking, it spurs other topics and conversations. I'm sure Chris really appreciates it because he looks on the group, and so yeah, definitely go on our Facebook group, Watersports and Tour Operators. Just go to Facebook and search for it. You'll find it, join it, and join the conversation. So, as always, appreciate you listening, and keep it awkward.
Keep it angry.